Good morning, everyone, and Happy New Year's to all. My name is JR. Welcome to my video analysis for both gold and silver. Today is the 20th day of 2015. This is the first video of the year. This video will probably be broken into maybe 2 or 3 parts. There's a lot of information I'd like to cram in here. I'm going to talk monthly, weekly. I'll probably even put the quarterly charts, long-term time frames, so we can have a better idea of what we're looking to do here on the long term. So I'll be showing quarterly, monthly, weekly, and daily charts. I'll also be showing gold, silver. I'll be doing platinum, palladium, as well as the Dow Jones and the US dollar. On my next video, I will do currencies and ratios. So I'll do the ratios between gold and silver, between platinum and gold as well. Beautiful trade for the ratios. And besides that, again, I'll try to make this as quick and painless as possible, and I hope you guys enjoyed. Okay, so this is your, let's start off with the quarterly chart here for gold. All right, so quarterly chart, this is how it looks. Right now we have if I'm looking at this chart, these are the trend lines that I'm looking at here. Okay, so on the quarterly chart, we can clearly see here that we tested this long-term trend line. Last time we tested this level was back in 2008 when we had a crash. And you can technically say that this is almost a crash as well, even though you have a really strong uptrend. You know, anytime you go up as high as we did, and then you fall back and you come down up to 40%, I mean, that's technically, I guess, a crash. And really, that's what we've seen in the gold market. Now, again, the uptrend is still very much intact, especially on this quarter chart here. Anytime I look at trends, we want to examine why we believe we're in a bull market or a bear market. So this is an obvious bull market. From this dip down here, we've really just broken through one level of support, which was really this level here. So this is your first level, and again, it wasn't necessarily the strongest level. And of course, this will be your second level if I'm looking for a change of trend on this quarterly chart, right? So currently below this 20-day moving average. And I've said this a lot of times. Anytime you are looking to establish a trend, you want to go above this 20-day moving average, come back down, retest the 20-day moving average, and then start shooting up higher, of course, creating higher highs and so on. So ever since 2008, really 2013, April of 2013, or the quarter the first quarter of 2013 was really the second time we tested this 20-day moving average. So currently below the 20-day moving average, if we're going to find a change of trend, what we want to see is we want to see a move below the 20-day moving average, come back, retest this 20-day moving average, and create another low. And that's where we're going to see a change of trend. So if we see gold currently trading at a 1292, if we see this thing go up into this, actually this is not a zone, this is the opposite zone. So this would be the zone that I would be looking for, roughly maybe around this area here. So what we want to see is we want to see a move back up to roughly around 1400, maybe even touch this level here, 1523. And then what you want us to do is you want to see a continuation. So you want to see further move to the downside, okay? Which at that point, this will be your last area of support, which does coincide with the Bollinger Band. Now, again, in order for me to call this a bear market, I need to see 2 levels of support being taken out. Currently, this is the only level, like I said earlier. This is the only level of support that we've taken out so far. And this is on the quarterly chart. So the quarterly chart is still bullish. If I'm looking at the monthly chart, obviously the monthly chart is currently bearish, right? So again, tested this long-term trend line here. If I'm looking at these levels, this would be your first level of support. This will be your second level of support as well, right here. Barely took this level out. So on this monthly chart, I wouldn't call this bullish or bearish because you didn't necessarily, I mean, you kind of took it out, but not really. Wasn't really a solid, we'd never even closed below this level here, below the 1150 zone, which was very, very, very important. But on this monthly chart, again, we saw exactly what we look for, right? When we look at for a change of trend. So we come, test the 20-day moving average, come below it, come back, right? Establish support, come back to the 20-day moving average, and create another level, create a lower level, right? So I'm not necessarily going to call this a downtrend or an uptrend. The monthly chart is really neutral if you ask me. And the reason why is because, again, we haven't necessarily taken out two solid levels of support. And we're still holding up on this long-term trend line. We have a huge bullish engulfing candle here. This is a monthly chart. So we do need to end the month on this. We need to end the month roughly in the high, I would probably say above 1250. If we can end the month above 1250, I'll call that an engulfing bullish, a bullish engulfing candle, and we have the potential to come up to at least this 1388 high or this Bollinger Band here. Okay, at this level, we are going to find some resistance somewhere around here. That's your monthly chart. Stochastics are still pointing higher, so chances are this thing is going to continue to rally a little bit higher. The monthly chart, I'm also going to call that neutral because you're not necessarily creating new lows and you're not necessarily creating new highs. Right now, we're really just flat, if you ask me, flat at these levels. So really, we want to see this market come above this level here, right? Or we want to see this market come below before we can establish another trend. All right, that's the monthly chart. Weekly chart. Weekly chart currently touching resistance. All right. So again, never really created a low here. All right. We were really just flat since 2013, since July of 2013. Really just trading flat, sideways, up and down, up and down. Finally broke below. But again, it looked like it was a false breakdown. Anytime we see a false breakdown, I've said it 1,000 times, the move to the upside is quite fast. Now we're in the process of finding some resistance here. I like this trade over here. If you're going short here, you can risk a very small amount with a stop loss maybe around 1306. Okay, your target should be coming down here. Your target should be somewhere around this 20-day moving average, maybe around 1250. So again, beautiful risk to reward. Again, you're probably betting around $15, $20, and you're looking to make roughly 50 bucks. So again, beautiful trade here. And if this trend is real, if on this weekly chart, again, the weekly chart is also fairly flat. I guess we were bearish up until we came here. Now we're just trading sideways, right? Finally broke through this trend line, but again, we're still currently testing this level of resistance. Again, the short trade would be 1306, 1307 stop loss, and you're looking to bring this down to at least 1230 or so, okay? And again, this is what we're currently seeing here. Move above the 20-day moving average, all right? Come back down, establish resistance up here, all right? Come back down, retest this 20-day moving average, and this will be your zone. This is where you're going to buy, and you're going to set up stop loss somewhere around, probably somewhere around 11, I would probably say 1150 just to be on the safe side. But again, what you want to see is you want to see a pattern of higher highs and higher lows. Currently above this 20-day moving average, the 20-day moving average has gone from coming down to going sideways. And what we're looking to do is we're looking for this thing to curve to the upside, right? So as of now, the weekly chart is also neutral. The daily chart is officially on a bull trend, okay? We're breaking out of this level here. Let me delete some of these lines here. And the reason why I say the daily chart is bull is because we've taken out more than two levels of resistance, right? Here's your first level of resistance we took out. There's a second level of resistance. This is actually a third level of resistance. This would be your fourth level of resistance, right? So on the daily chart, we've gone from neutral to, from bearish, came down over here, came up above this 20-day moving average, 20-day moving average starting to curve to the upside, come back down again, Swiss referendum here, and create another high. This is another high. Come back down, create a higher low, right? And now we've created another high. Beautiful trend here on this daily market. I like the way things are looking on this daily chart. But again, we have to keep in mind that this is currently the trend here, right? Roughly around this level here, all right? So now what we're waiting for is we're waiting to see what's going to happen here. We are running into some resistance again, like I showed you on that chart, on the previous chart. So we could see a move come back down to here. At this point, we'd want to test this 20-day moving average and again create a higher high. So if we're going to test the $1,400 range, the 1388 range, we have to come back down and break through established resistance. Now we can trade sideways for quite some time, but I would expect the market to come down, take a little bit of a breather, and then from here start creating higher highs. Okay, so gold chart looking really robust, very nicely. The longer term time frames are no longer bearish, but they're not positive just yet, but the daily chart is. Let's go over the silver chart. So again, expect to find some resistance here for gold currently at the levels that we're in. This is your chart for silver. Silver never touched this bottom, this trend line here. All right. And again, on the quarterly chart is still bullish. Why? Because again, we have not taken out two levels of support, right? Barely took this one out. Again, didn't even see a close below that. This would be your next level here. All right. So on this quarterly chart, we can potentially continue to go back down. This 20-day moving average is starting to curve. And what we want to do is we want to see a move up here, test this 20-day moving average and either create another low or start creating higher highs. But the quarterly chart is still bullish. Monthly chart took out one level of support and took out the second level of support here. All right. So this monthly chart is bearish. All right. We have another level because we took out three levels. So this monthly chart is bearish. And currently, we're about to test this 20-day moving average on top of the fact that. So currently, we're about to test this 20-day moving average here at around 1835. Okay. And this is the levels that we'd like to see taken out. This is the level. We can take out 25. We can be on our way back to the highs. But as of now, the monthly chart is fairly bearish, and the first level that we want to take out is this level here. Once we start taking out these levels here, this is level on top of level. Mostly this level area here for us to change things around here on the monthly chart, right? Stochastics are still pointing higher, so that's a good indication. We'll go to the weekly chart now. Weekly chart. Let's see. So weekly chart took out the first level of resistance, roughly around here, or currently taking this level out, about to take this level out. And we did take this level out, right? You had a bearish engulfing candle here, so technically we should have gone down further, but we didn't. We found really nice support here, and now we're in the process of creating a higher high. So again, currently above this 20-day moving average, right? What we want to see is we want to see the market establish a set resistance roughly around this area here. We're in my zone. I wouldn't short silver. I like the short on gold better simply because it is a confluence with one of the trend lines. On silver, there's no trend line here for me to match with. So once you break the trend line, I like to leave it alone. Market is going to do something like this. We expect the market to come back higher. Maybe find some resistance around here, the Bollinger Band around 1850. Come back down. Retest this 20-day moving average and start creating higher highs. That's on the weekly chart. So the weekly chart also neutral, not creating lower lows, still in process of creating higher highs. Daily chart officially bullish, right? Come above the 20-day moving average. You want to find support, but again, this is the Swiss referendum. Come above, create a higher high. We did that. We did not create a lower low. Last time I did my video, we were here, and I mentioned that a break above this would be very bullish. A break below this would be very bearish. You have, this would be a trend line here for you to draw. Market comes back down here around $17, you buy. You want to put a stop loss maybe around here, the $7 to $16 range. You want to create a higher high. You want to go to $18, $19, $20, but you want to follow this trend. So that's your silver chart here. Silver chart and gold charts looking very, very nice. Okay, Let's do the Dow Jones now. Dow Jones, we've been following this broadening formation here on the Dow Jones. Here, this is the daily chart, right? So found support, found resistance, both at these levels in this trend. This is the bottom side of this broadening formation. And I said that we were going to keep a very close eye on it. What do you have? You have the 20-day moving average going up, breaks the trend, creates a higher high, right? Come back down. Now you have a flat 20-day moving average. This 20-day moving average is no longer bullish. It's flat. It's trying to find direction. If this thing curves to the downside, you want to expect further losses, okay? But again, this 20-day moving average is flat. We want to see this thing either start pointing back up or point back down. That's when you get really a better idea of where this thing is going. If it breaks the 17K level here, there's a good chance we're going to come back down all the way here to the low 16,000. Okay, that's your daily chart. Let's look at the weekly chart, longer term time frame. Weekly chart still bullish. Okay, really this would be your level of support, right? This market comes down here to 16.5. You can probably set up actually, to be honest with you, I don't know that I would take this trade, but you know, if you wanna, if you are aggressive, I would probably wait for it to get to the bottom of the band here, maybe around 16K. Then your bet is only about 300, 400 points. Maybe put a stop loss at around 15.6. And of course, you want to continue to see if this thing is going to continue to go higher. Again, this Dow Jones has proven to have tremendous, tremendous legs. But the 20-day moving average is still pointing to about 1 o'clock. So until this thing flattens out, okay, and points to 3 o'clock, and then turns around, that's when the trouble is going to begin. That's on the weekly chart. The daily chart, again, we have this broadening formation, and really just waiting to see what's going to come of this. A lot of news here in the last couple of weeks. I'll do a fundamental video also with some of the current fundamentals, but a lot of scary stuff. The Swiss bank has just unpegged the Swiss franc to the euro, and this is what happened. And you see what happened to the euro and the Swiss franc. I mean, just a ridiculous loss. And if you had money on the Swiss franc, if you were betting long of the Swiss franc, I mean, there's a good chance that you probably made a good 5,000 to 10,000% on your trade. If you were short, there's a good chance you lost your pants off. Because again, I gotta be honest with you, I don't think I've seen a move this big ever in one day. I mean, back here, let's say the euro versus the Swiss franc was at 1934. By the end of the quarter, it was at 166. So it went from 193 to 166. You lost about 300 pips, what we call pips, or let's say 30 cents. Not that big of a move within a quarter, or a decent sized move in a quarter. What we saw was overnight, we saw the Swiss franc go from 120 to 84. I mean, really, just a collapse in the market. And of course, everyone gets blamed except the central bank for not warning anyone that they're going to unpeg the Swiss franc, right? But really, every currency against the Swiss franc. Look what happened to the New Zealand from 77 to 40 to 40. I mean, this is almost a 40% drop literally overnight. This is a quarterly chart, but it happened in overnight. Literally, this is one candle. It went from 178 to 139. I mean, it's unreal. This is overnight. Everything against the Swiss, the pound. No currency was safe against the Swiss franc. Let's look at the US dollar now. Okay, let's look at the daily chart here for the US dollar. Actually, let's do the monthly first, right? So this is the monthly chart. We can clearly see that this market is in a downtrend, right? How do we know when we're in a downtrend? Well, because again, you're respecting the levels of resistance and you're breaking the levels of support. That's really the definition of a downtrend, right? So over here, you have level of resistance. You break the level of support established here, right? Let me get my handy dandy tools here, freehand. So this is a level of support, level of resistance. Levels of resistance are respected, levels of support are taken out. Again, respected, taken out, and so on and so forth. So as of now, this monthly chart is also neutral because, again, these are the levels of support that mean something right here, right? This is the last level of resistance that was really respected before this market just completely came down all the way down to 70. Currently trading at 92. And a great trade idea for me would be to short the US dollar roughly around here where it is right now. Like so far, we've seen a high of 93.30. And you have a stop loss at around 95, right? You put a stop loss around 95. Good risk to reward. You're risking about 3 or 4 points, right? From 93 or 92.80 all the way to 95. So you're risking about $2 on the US dollar. And your goal should be to come back down here, maybe to the $88 level. Now, again, this is counter trend. This is still a flat market. We still don't really know on this monthly chart where this market is going to go, if it's going to break this level of resistance. But again, if you're aggressive, you can take that trade. That'll be a really nice trade that I think can give you some really nice returns. But again, that's just me. I'm not personally taking that trade. Okay? And remember, these videos are for entertainment purposes only. Okay, that's your weekly. That's your monthly chart. This is your weekly chart. The weekly chart definitely in a bull market. Let's take that out of the way. Okay, and what we're gonna do is let's take a look at this this level. So right now, currently trading at 92. The market has gone up, I mean, fairly fast. And this is probably the trade that you're looking at. So you're probably looking at, let's say if you're trading this US dollar. Right? So this is your established trend, right? So this would be your next level of support. Your first target, if you short this market, would probably be around 90, because this is, again, this is the trend, just a phenomenal trend here on the US dollar. And currently, I mean, believe it or not, the dollar and gold have been trading relative to each other, which is very unnatural. Obviously, they trade in opposite directions, right? When the dollar gets strong, gold gets weak, and gold gets weak, and vice versa. So currently, right now, in a very strong trend. This would be your last level here, at least for now, on this weekly chart. Let's draw a line here. This would be your first level of support here, right? Between 89, actually between 89 and 90, you can buy here and try to create higher highs. If it breaks this trend line, this could easily, very easily, start coming down, do something like this. I can't draw the lines like I can with the other one, but right? So this can very easily come down. Once it breaks this trend line, this can easily come down here to 85, even back down here to 81. Believe it or not, I know the dollar is extremely strong, but again, this is just technicals talking here, right? But we want to see what happens with the US dollar. Again, a lot of interesting price action here within the last couple of months. That's the US dollar. And so I'm at roughly 24 minutes. I'll end it here. Tomorrow I'll do another video, or maybe later on today I'll do another video. This one's going to be ratios between gold and silver, between platinum and gold, as well as the US dollar versus the Dow Jones, and so on and so forth. So I'll do a couple ratios, and my last videos will be some of the currencies. I'll give you a brief I'll give you guys a sneak preview, right? Australian dollar looking extremely nice. I mean, look at this chart. You don't have to be a genius to look at a chart and say, okay, 137 is the high, 140 is the low. I mean, where do you buy and where are we, right? You are bananas if you didn't pick up any Australian dollars here at this area here between 1364, which was the low, all the way up to 15, let's say 1507, which was this low here, right? Right. But this is the this is the Australian dollar really across the board. I mean, look, I mean, just big candles because everyone's getting back into the U.S. To the Australian dollar. But there's a few of my favorite picks that I have. This being one of them, the Australian dollar versus the New Zealand dollar. We also have the euro. Phenomenal opportunities on the euro. We finally broke through this extremely significant trend. I mean, support line here at around 17. And now that we've broken through this level, very similar to silver when we broke through, this level here. I think silver, because of the different fundamentals, right? It's a physical. It's not a fiat currency. It can't necessarily be manipulated the way other fiat currencies can. But again, kind of something like this. Anytime you break through roughly 2011 to 2013. So you had 2 years of sideways consolidation. Over here, you had almost 3 years of sideways consolidation. And what happened once you've broke through those levels, the market just tanked. And this is exactly what I expect here for the euro versus the US dollar. The euro has broken really a trend that's been established since 2009, really been trading sideways for the last 4 years, 5 years. And we finally have broken down below it. Personally, I think this is a phenomenal opportunity for anyone to make money in this market. I personally am predicting a price of at least parity against the dollar within the next probably maybe before the year is up or maybe by 2016. Okay. Maybe by 2016, but I definitely do expect the dollar to be to be at parity with the euro. If I'm taking trades, I'm looking to probably, I usually like to get out before everyone does. So I'd probably be targeting roughly around 103, 104. And that would probably be my target. But at this point, I mean, maybe a move above this level here. If you want to be on the safe side, maybe a move above 128 will probably break this level. But at this point, I mean, you've broken this level here. That's very significant. And at this point, I'm expecting much lower prices. All right, that's about it, guys. I hope everyone enjoyed this video. Sorry if I made it a bit too long, and I'll see you next time. Bye-bye.